Welcome back, guys. This is probably the stock I'm most excited to share with you guys, and I think this is going to be the best video yet. So please stick around and watch this video because there's so much things going on with this company, and it is extremely cheap for a company this big, 46 billion market cap, to be this cheap. I just cannot believe I found this. They do pay a 10% dividend. It is safe. It's a 4.75 out of a 5 rating. Dividend, we're going to get into so much stuff. They have 36 billion dollars in cash right now, 32 billion in debt. They can pay off all their debt right now. They'll have almost as much cash as their market cap. Okay, first of all, what is the stock? It's STLA, Stella, ticker symbol. Stellantis, what do they do? That's a great question. We're gonna start with this. All right, so they are an automaker company. They make, they design, they produce, they sell cars. They have 14 different car brands. They are in North America. That's their biggest source of revenue, North America. Second is Europe. Third is South America, Brazil, India, and then China. China is the smallest one, but they did just launch a JV with another Chinese electric car manufacturer, and now they will be the fourth largest EV company in China as well. So China is going to be a huge game changer for them. And they did also make a $5 billion investment into South America, and that is going to grow a lot as well. They have 14 different car brands. What are the car brands? Some of them are Alfa Romeo, Chrysler, Citroën, Dodge, Fiat, Maserati, Jeep, Opel, Peugeot. So this company, a lot changed for this company. This company became what it is in 2021. In 2021, they had a merger with Fiat and the French PCA group. So if you don't recognize the Opel, Peugeot, and Citroën, those are French cars. They're very, very popular in Europe. They're like the Toyotas and they're just regular cars in Europe. Everybody has them, and they merged with Fiat, which has all of the other companies, and they became this behemoth of a company that is. Look at this earnings. They're growing like crazy. Well, now they're not growing as crazy. They're down from year over year, but they're still extremely profitable. And even though the revenues are down, their earnings are up. And these guys produce, I'm trying not to swear, a lot of money, and they do pay a 10% dividend. We can go over that right now, how safe their dividend is. To pay off their dividend, I don't have to read it off here. I'll show you guys right here. So if you use Stock Unlock, we're going to be using a lot of resources I'll put you guys on in this video. So they only pay 24% of their net earnings or in 37% of their free cash flow to pay the 10% dividend. So this dividend is very manageable and is very safe. 3 billion euro share buyback program right now that is ongoing. So right now we can just dig into that, and then we're going to continue with the script. But as we can see, their shares are going down now, which they did dilute the shareholders earlier. Ignore this because never trust like Yahoo and Stock Unlock and all these websites and applications where the numbers go straight to the website, because here it'll say they have $50 billion in cash, which they don't anymore. They have $36 billion in cash. So as we can see here, right now they have 3 billion shares outstanding, down from 3.2, and they have a 3 billion share purchase program. So shares are going to continue going down. So first quarter, we can get into this. Another thing I really want to point out is this is the first video using Perplexity, and it's an AI, and I asked them to do a stock analysis on the STLA, and let's see what they said. So current stock price $15, down from the highs of $30, which they're down in just a couple months, because we're going to get into this a little later, or we were planning to get into this a little later, but they do have a lawsuit going on. Actually, we will get into later. But why the stock is down so bad is because they had a lawsuit where they kind of projected fake numbers and said the expectations higher, and then when reported Q2 earnings, it was actually lower than expected. So everybody got mad, and now they're going into a lawsuit because of that. But these guys have a really healthy balance sheet. I'm sure it's nothing to worry about at all. And we have a lot of stuff to get through. But yeah, okay, let's get through this. Some of the bad stuff. Net revenues of $41 billion. This is for one quarter. They almost as much revenues in one quarter as their market cap. Down 12% compared to last year, first quarter. So this is the first quarter of 2024. We're going to get to the second quarter as well, halfway into 2024. So we can see it's down in Q1 year-over-year shipments and net revenues comparing difficult due to transitions into our next generation product portfolio. So that is the thing right now about the company. They're leading the charge in electrification and software development with cutting edge technologies at the heart of our products and services. They're in 130 different markets. They are on the New York Stock Exchange. And if you look at Seeking Alpha, temporary operational problems allow you to buy shares cheaply. So in the automotive industry is a very hard industry to stay alive, and profit margins are not very good for most of the companies. These guys are doing all right. They have about 10% net margin. And the main thing is you have to be able to adapt. So these guys have a really good CEO that has done a great job with management, and they've been adapting and producing more and more products of different vehicles. I believe they're releasing like 40 new vehicles in 2024 alone. So they're supposed to be carbon net zero by 2038. So it's going to be all electric and all sorts of different electric-ish vehicles. Okay, but yeah, we're sticking to the script. So Stellantis is a major automaker based in Netherlands, which designs, manufactures, distributes, and sells a wide range of vehicles. So they will sell a total of 5,000 units, down 7% year over year, and are projected to sell 6,000 units, grow 6% year over year in 2025. So we're going to get into valuation. I'll put it right here. I'll put when in the video I get to the valuation, because it's a very cheap company, so you want to see the valuation. It's intrinsic value, analyst projections, and whatnot. Why did I put this in here? What is this? What can we find out from here? So the price target is $21, trading at $15. It has 14 different brands. It has a luxury brand, Maserati, premium class Alpha. So they're, okay, I know what this is. There you go. So they're sold in 5 geographic regions: North America, Europe, Middle East, South America, and China. So North America is 30% of sales. So most of that comes from America, 9% Canada, 5% Mexico. And if you can see the market share, the market share is a little bit down, but they still have almost 10% of the market shares, with 1, 2, 3, 4, 5 companies ahead of them. And if we scroll down, the next one will be Europe. So in Europe, mostly, well, a lot of countries in Europe, and they are the second biggest market share in Europe. So they own 18% of the market in Europe, down from 2020, 22%. But this is still a huge portion of the market, and these guys are not going anywhere. And this is they have a huge moat. Like for any other, it'll be very tough for others to take their market share. So in the Middle East, they're the second. They have the second biggest auto manufacturer in the Middle East. They hold 16% of the market share, which is up from 15% in 2021. South America, they are the first. In South America, mostly coming from Brazil, they own 31% of the market, and the second one behind them is Volkswagen, which holds only 60% of the market share. So they hold almost double the market share. Sure, it is down 1% from the previous year, but they own the market in South America. And China, India, and South Asia, let's say, it does not say. Okay, the market share is extremely small and fell from 0.6 to 0.4 from 2021 to 2023. But then that's why there's Leapmotor. So what is Leapmotor? It is a joint venture between Chinese electric vehicle maker Leapmotor and Europe's second largest car maker by sales, Stellantis. So Leapmotor. Leapmotor International ships the first batch of Leapmotor electric vehicles from China to Europe this month. This is July 30th, 2024. So this is very recent news. They're launching 2 products, the C10 and the T03 electric vehicles. They're going to Europe, and they're going to send more within the following months. Milestone for Innovator JV joint venture. So what else can we see here? They're going to be selling in 9 European countries starting in September, and plans to establish 200 sales points for Leapmotor vehicles in Europe by end of 2024. And here we go. Leapmotor International will expand product launch to Middle East, Asia, and Asia Pacific, and South America. So they're going to get some of those Chinese market share in Middle East, Africa, and Africa. Oh, I didn't even notice that. So awesome. They're expanding everywhere. This is what the car looks like. Looks like a general electric car. Very modernish, sci-fi-ish. So they're sending a batch there. We will see how they will do. So let's see here. As of the first half of July, Leapmotor has cumulatively sold over 400,000 EVs in China since the company's first scale. 400,000 EVs in China. That is huge. So we can see the Leapmotor founder and CEO. China is the biggest and most competitive EV market in the world, and our products have proved their value by being acclaimed by the local customers since the very beginning. C10 and T03 models are designed to meet the high standards of global customers. We are confident that the collaboration between Stellantis and Leapmotor will drive significant growth for both companies. I think this is a great win-win, where with Stellantis, the Chinese companies, Leapmotor they kind of share their market share. So they will sell in all these different regions, and they will work in the design together and whatnot. And with Leapmotor, they get the huge market share in China. So let's see this. The JV plans to increase sales points for Leapmotor vehicles in Europe to 500. by 2026 from 200 at the end of 2024. Distribution channels. So they plan to have 500 distribution channels by 2026. And right now they will have 200 at the end of 2024. So that is more than a double. So that is going to grow. So still those two products, they're on their journey to Europe. Feel free to stop and read through this yourselves. Let's get into it. The first half of 2024. So if you just read through here, the company's performance fell short of our expectations, reflecting both a challenging industry context as well as our own operational issues. There's some stuff to point out in the future of the video. While corrective actions were needed and are being taken to address these issues, very good. We also have initiated an exciting product blitz with no fewer than 20 new vehicles launching this year. But that brings bigger opportunities that we will execute on as well. We have significant work to do, especially in North America, to maximize their long-term potential. I want to thank everyone. So their sales in North America is falling. Their biggest would be the Dodge because, oh, right here it says, okay, so more than 20 launches, including refreshed Ram 1500. That's very good because we can see right here in this post that Stellantis is discontinuing the Ram 1500, the classic pickup trucks, 1500, 2500, 3500, blah, 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 and they're laying off people. But then if you read here, they will start laying off as soon as October. And if you find it over here, where is it? So yeah, the final number of indefinite layoffs is still not decided. So some of the employees might be given other jobs or positions at the other plants. So maybe with the Ram 1500 refresher, they will continue producing it in this Michigan factory. And one other thing the CNBC is pissed about, or this person is that Tavares, the CEO, jacks up his own pay by 56% while laying others off. This guy's getting paid $11 million salary. Is it a little too much? It is, but the man has been around for a long time and he knows what he's doing. And he helped this company through the merger. And as long as he keeps doing such a great job, $11 million is the price to pay for that. And I think he's the best guy to lead this company in the future. And I'm very bullish on him. So that's done. What else can we go through? So this is the lawsuit. Like we said before, we can read in some of the details. So according to the complaint, the company made false and misleading statements to the market. Stellantis made positive statements about its business prospects to investors while simultaneously concealing facts about their inventory levels. So their inventory levels are up, and they also made false statements about pricing and the market share. The truth about the company's performance emerged on July 25th, which is not even a month ago. And if you can see, in that month, the company is down bad. And left a bunch of gaps here to fill. And right now they're selling at the same level as they were in 2019. I think this is just, I think in 2018 as well. In 2018 they were more expensive. And they were a fraction of the company they are right now. I think this is they have really strong support right here, and I think this is a good time to start buying. Hopefully they won't break down below the support, and they'll be trading in these levels for a little bit, consolidate before breaking up. I'm no technical analysis expert, so don't listen to me, not financial advice. But even on the RSI is at 28. I feel like this is a great opportunity to get in. These guys do pay annual dividends, if I did not mention before. And I will personally be starting a chair and keep digging into this company. So if you guys are excited about this company as much as me, comment down below and I'll make some more videos for you guys. Stock analysis, another great app like Yahoo, like Stock Unlock. Okay, we'll go through this and then we'll get into the valuation, guys. So right here we can see they have $32 billion in debt and they have, how much in cash? $36 billion in cash and cash equivalent. This is also all in euros. Okay, so that makes sense because if, what is it, $36 billion in cash of euros would be about $50 billion in America. So I guess they do have more money than the market cap, which is just insane. And all right, guys, let's get into the valuation, then we'll go over some other stuff. So the stock price decreased 11% in the last 52 weeks. And in the last couple months, they dropped from 30, so even more. All right, so what can we see? Share statistics, shares are down 2.4%. They're doing share buybacks. The shares outstanding will continue to decrease. PE ratio, price to earnings, they're trading at 3.4 price to earnings. Insane. 16 times free cash flow. Forward price to earnings, 3.19. Revenue 188 billion, gross profit 34 billion, net income 14 billion, so almost 10% revenue to net income. Now, what else? Buyback yield 2%, payout ratio 35%. We went over this. Total valuation. I thought there was some more stuff for sure. You can see the cash. Enterprise EV is enterprise value to earnings 2.8. Very good balance sheet. Right, so we can see that how much the insider sold. Insider sold 25% of the company, and institutions sold about 48% of the company. Institutions have not been buying much lately, nor have the insiders. There's only been insider sellings, which is not the best thing for the company. It's not what you want to see. We can take a look at it, but then we can see BlackRock has added 5% to their position in third month of 2024. So 5 months ago, they added a lot more shares. So has Aero Street, but then others have sold. End of 2023, these guys sold 12%. It is what it is, guys. It is what it is. Now, let's get back into the valuation. Went over this. So there's this other stuff.
Need financing to grow your business globally? From Vision.
Please like and subscribe, guys. There's this other video, the Bald Investor. I think that's a hilarious name. Props to you, Bald Investor. If you look at his valuation in the company, I don't know why it's like that. There we go. So his intrinsic value, what he calculated. Let's see what it says. $21 is the current share price at the time of when he made the video. Right now it's at $15. And the intrinsic value is at $42. So there's a huge margin of safety. And even if we predict very low growth rate, estimated growth rate, let's say let's just say the very lowest. This company is worth at least $60. Then one thing I want to take a look at. Right here. I use Moomoo for buying stocks in the US stocks, in the New York Stock Exchange and the NASDAQ. So if you don't, there's a link below to use Moomoo if you want to. $2 commission. So these guys gave a fair value of STLA at $38. Analyst price targets $24. Price to earnings 3. And right here we can see where the revenues are coming from. Or over 40% in North America, then Europe, South America, Middle East, and China. And then how can we skip this? So we can see right here, go a little back, the earnings per shares. So even though revenues were down and are projected to go down, they missed the guidance, they missed the estimates. In earnings per share, they missed it as well, but they still kept their profitability. It is expected to go down as well. So this company is not a crazy growth stock. This is just a value investment because the company is like fundamentally undervalued. And that's where I see the opportunity when the market is just ignoring the value of these guys. We can see the industry price to earnings for the automotive industry is 14 price to earnings. That's what the average company is selling at. This company is selling at 3 times price to earnings. Price to book value of 0.5. Less than book value. If the company was to sell everything, it would be worth more than the market cap. 2 times. These guys have the same amount of cash as the market cap. The industry average is 2 times book value. Price to sales of 0.2 when the industry average is 1. If you look at any ratio, this company is extremely undervalued. And that is why I'm so bullish on this company. And I think they're doing a good job. I think this is a great management. And even in the video in the company, they said they have the heart of a startup, which is required in this field, which is a very challenging and competitive field to stay alive in. They need to produce more products, get into EV, which they're doing a good job of. And the biggest thing is they're already such a huge company that own so much market share. And that just makes me feel a lot more safer about the company. And the other thing is how they are so healthy and so far away from bankruptcy. They have such a good balance sheet. And they're very disciplined with their investing that I'm just very bullish in the company. And it makes me safe investing in them. I do expect this is going to 2x within a couple of years, but this is a 5 to 10 year hold for me, at least a 5-year hold. So I will start opening up a position. So let's see what AI says. Analysts have a price target of $27. That is almost 2 times the current price. So financial health has a revenues 190 million, increase of almost 6% year over year, dividend yield of 10%, So we can see the lawsuit. So the lawsuit implications. So financial implication. So what are the cons of the lawsuit? So lawsuit result in a settlement or a judgment against Stellantis. The company may face substantial financial liabilities. This could affect its financial health and stock valuation. I believe the stock valuation, it's already integrated in the stock valuation and it's already charged into the discount it is right now. And financial health, it is financially healthy and able to take this law even if they lose in the lawsuit. Reputation, yes, the reputation did go down just mentioning the lawsuit, not even losing it, because they did lie. I believe they're most likely going to lose the lawsuit, even though I did not dig into it yet. And I did mess around with the AI and some other stuff I found is asked it, what is your outlook on the company? So it mentioned the carbon neutral by 2038. The plan indicate targets such as 100% battery electric cars, BEVs, 50 sales in Europe and 50% in the United States, doubling net revenues and sustaining double-digit operating margins. This is one thing they mentioned again and again is the double-digit operating margins. So these guys are very focused on staying healthy as a company and having healthy margins. Love to see it. The company is focusing heavily on electrifying vehicles, plans to launch 25 new models, including electric SUVs, muscle cars. They have 14 different brands. They're launching a whole lot of new things. So they're providing flexibility based on market needs. Very good. Global market strategy, they're expanding everywhere they can, really, wherever they're not already. Conclusion, future prospects closely tied to its ability to navigate the transition into electric mobility while maintaining profitability and adapting to market demands. So that is exactly what you're doing. Spot on. That's it for the guys. I'm bored of the AI. But one thing that, like, when doing research that I will be using in the future is AI. And the other thing is Twitter, X. I think especially for trendy stocks like Fubo and SoFi, if you're a subscriber of mine, there's so much information on Twitter that or X that it shouldn't be ignored. There's so much stuff here. It's like a Reddit. I know a lot of people use Reddit. I sometimes use Reddit. It is nothing compared to Twitter. So, while I still have you guys here, if you're here watching, thank you very much. And let's see if there's anything else I can talk about. No, that's pretty much it. All right, insights on Stock Unlock. Let's see their valuation. So we can see that it's changing at 2 times earnings, or they say it's 2, but it's more close to 3. 5-year average is 3. Price to cash flow, I don't know. And Stock Unlock gave it a PEG, price to earnings growth ratio of 0.12. Price to earnings growth ratio of 1 is good. Anything below 1 is amazing. They give it a 0.12. For the Mega 7, which have the best PEGs, theirs is like barely below 1 and some are even above 1. So I don't know if they calculated this right. We'll just ignore this. The people in the comments are very positive about it. There's one really good comment, which is the top comment. We'll read through that really quick. So yeah, return on equity is 26%. Price of shares are well below book value. Paying a healthy dividend, buying back shares. The most important thing is having Carlos Tavares at the helm. So this guy agrees with me. I went back through all the financial reports from the PSA Group, which is the French company in the merger, from 2013 when they were almost bankrupt to 2021 when the merger with Fiat Chrysler formed. During the CEO leadership, PSA Group went from near bankruptcy and consistent losses to becoming a high net income company. And they bought out Opel in 2018 as well. So they have Opel is one of their brands. And Opel had net losses for 20 consecutive years with their GM. In the very first year around Carlos's management, they turned a profit. I think this company is worth 4 to 5 times its current price. Amazing post on. So again, this is the guy that's getting paid $11 million per year. I think he deserves it. And we can see analysis. Yahoo Analysis projects the revenue will grow to almost 200 billion next year. Let me know what you guys think. Do you guys want another video on this company? And what are you guys buying? Please like and subscribe, and thank you guys so much for watching. I'll see you in the next one.